Yeah, I mean, I think trading is, because we've mentioned, is quite risky, right? So I think a risk seeker effectively would be drawn to trading, or someone that needs to generate money very quickly. I mean, like I said, you could also lose that money just as fast.
Yeah.
But I also said, like, everyone should be an investor, right? So it's not
Yeah.
necessarily that you need to be conservative to invest. I mean, you can still have an aggressive investment strategy. It's just that people that trade are generally, risk seeking.
Welcome everyone to another episode of Frankly Speaking, where we tackle topics around managing your money and investing with a no jargon approach. My name is Cassidy Nydahl. I'm the head of growth at Franc, an investment app that's making investing accessible and easy for everyone. Today we're going to be talking about investing versus trading, what they both are, what the differences are, and what the pros and cons are. With me today I have Seb Patel, COO and co-founder at Franc. Thank you for joining us in the Frankly Speaking studio, Seb.
No worries, Cass. Look forward to the chat.
Awesome. Seb is an actuary, so he is our go-to man for all tough topics around investing and finances. So we're putting him in the hot seat today.
Cool. Try my best.
Awesome. I think let's start by defining exactly what investing and trading both are.
Sure. Well, I mean, investing and trading, you both use to try and make money. It's just that the time horizon is quite different. Investing is a much longer time horizon versus trading, which can be instant, couple of hours, couple of days.
So let's maybe talk about what kind of assets you would be investing in versus trading in.
Cool. So there are some similarities. So you could invest and trade in things like shares or stocks. You can invest in and trade in things like maybe cryptocurrency, if you've got a long-term view on cryptocurrency, but you can't really trade in property, for example, because it needs to be something that you can buy or sell pretty quickly. And as we know, property, with transfers and all that kind of stuff, it can take months before you can either buy or sell a property. So yeah, there are some similarities, but also you wouldn't really want to trade a money market fund, because you can't. Like, a money market fund pays interest. It's not something you can buy at a certain price or sell later at a higher price.
I'm currently in the property market at the moment, so I'm learning the hard way how long everything actually takes. So that makes a lot of sense. Okay, so let's talk about the actual time horizon for trading. Like, how long are we talking when you're holding or selling shares or stocks?
Yeah, I mean, it can, like I said, can be a few minutes. Like, you can buy something for 10 now and then like sell it for 10 Rand 10 cents in a few minutes. It can be a couple of days. Like, when you're trading, you're actually competing with quite hectic computers. Like, it depends on how sophisticated a trader you are, but like, you've got algorithms that are running trading programs that are effectively trading in milliseconds, and there's a lot of money being invested by people to try and get that millisecond down, and down and down and down, so that you can take advantage of arbitrages in share prices or forex or that kind of stuff. That's why, as like a desk day trader, you're competing with some sophisticated software out there.
Okay, so that was going to be my next question. I mean, I obviously have a full-time job that's not in day trading or trading generally. Would I be able to do this kind of as a side hustle or something on the side?
You can. It's very difficult. Because firstly, you need to know what asset you're trading. Is it stocks? Is it currency? Forex? What are you trading? And then you need to keep a constant eye on it, right? Because, like I said, like, prices move pretty quickly, and if you're on the wrong side of it and you were having lunch at the time, then all of a sudden your trading your investment could be wiped out, right? So it is something you can do. It's just you need to mitigate the risks, and you understand that your chances of success are not great, to be honest.
Okay. So it seems like time commitment is a huge factor when you're going into trading, as well as knowledge, I suppose. You really need to know the markets and the stocks that you're buying and selling, right?
Sure. I mean, so I think with longer term investing, you need to understand the company, you need to understand the industry, because you're taking 3, 5, 10-year view, like what's going on. Trading, often you don't really need to know too much. You like kind of looking for patterns in prices. There is maybe you can take a view that, okay, I think the rand's going to go up or down, or the stock is going to go up or down because I'm expecting this piece of news or whatever it is. But often it's just people just taking advantage of or taking a guess in terms of where they think the price is going to move. So it's not that much like fundamental research that goes into it. It's more kind of like pattern recognition and that kind of stuff. Yeah.
Cool. And if I were to go into trading, would I need to have a certain amount of capital to start with?
Sure. I mean, there's a few fundamentals that you need. One is obviously money. Two is open up a trading account that lets you trade in the assets that you want to trade. So obviously something that's relevant for either crypto or forex or stocks or bonds or whatever it is that you're trading. And yeah, because you're trying to take advantage of small movements in prices, you generally need to have a lot of money to trade. Because I mean, even if you make, let's say you got 1,000 Rand, you make a 1% return, that's 10 Rand. It's not really going to change your life. So what people end up doing is that they use a margin effectively, right? So it gives you exposure to a much bigger like pool, I guess, with a limited capital outlay. So I'll give you an example. Let's say there's a share, it costs 100 Rand. For you to buy 100 of those shares, it's 10,000 Rand, right?
Yeah, which is a lot to put down.
Which is a lot, right? But even then, like I said, if that share price goes up 10%, you would have made 1,000 Rand, which is nice, but also not going to change your life. So what people end up doing is that they put down a margin, which gives them exposure to the same like amount, right? So in this example, if I put down a 10% margin, so 10% of 10,000 is 1,000 Rand. What happens is that I still have exposure to those 100 shares, and it kind of like magnifies the return, and it magnifies it both up and down. So effectively, let's say, so I put that 1,000 Rand down and the share price goes up by 10 Rand. Because I've still got exposure to those 100 shares, I've made 10 times 100, which is 1,000 Rand, which again was the same what would have made earlier, but now I've only put 1,000 Rand down. So here I've like doubled my money, right? So relatively speaking, it's a much better outcome. The problem that comes into play is that if the share price went down 10%, I've still got exposure to those 100 shares. I've lost 10 Rand times 100, so I've lost 1,000 Rand. So effectively that margin that I put down is wiped out. And what you would need to do to prevent further losses is like put in place what's called a stop loss, so that you say, okay, my 1,000 Rand that I put down is what I'm willing to lose and no more. Because as you can imagine, let's say the share price goes down another 10 Rand, effectively you need to put in 1,000 Rand so that you are equal with your counterparty, your trading platform. So in as much as you can make money very quickly trading, you can also lose money equally quickly.
Okay. So when I was doing some research around investing versus trading, one of the top research, or rather the top search questions was, what's the difference between trading and gambling? And just based on what you're saying here, it seems like there are many similarities.
Yeah, it's very similar. I mean, look, you get people who trade for a living. You get people that gamble for a living. So, they kind of know what they're doing and maybe they can make money out of it. But at the end of the day, you're speculating, right? If you're not a professional trader, you're speculating. You like, I think the Rand will do this, or I think the stock will do that. Or yes. So it's like, why do you think that? Like you kind of, there's a lot of guesswork, right? It's like gambling, which is often 50-50 or even less than that. Trading is very similar because you're betting on a kind of binary outcome. Is it going to go up or down? And if you get it wrong, then you're on the losing side.
So high thrill, but high risk.
Yeah, definitely.
And there are certain fees involved in trading, right? Do you want to chat about that?
Sure. I mean, that's also something to take into consideration when you decide to trade. Like platforms will often have a trading fee. So every time you buy an asset, there's like a percent or 2% or whatever the fee is. So when you're buying 100 Rand worth of shares, for example, you're only getting, or if you're putting 100 Rand down, you're getting 99 Rand of value or 98 Rand of value. So that needs to be taken into account, because when you sell that, you then need to recover those fees, right? So even if you make 1 or 2%, you're just about equal, because you would have paid those fees. And also when you sell, there's often fees again, right? So it's in and out that you're paying fees. Another thing to take into consideration is what's called like the bid offer spread. So that's the difference between what buyers are willing to buy at and what sellers are wanting to sell at. So that's kind of another almost like hidden cost that you need to take into account. So what you buy something at today, you may not be able to sell at tomorrow just because of that spread.
Okay. And taxes, do they work pretty much like with investments, or is it slightly different?
It's a bit different. So if you hold long-term investments and you want to like sell, then you pay capital gains tax on that, which is a lot less than your income tax. Trading is often seen as a money-making activity, so it's not on capital account. So there you have to pay tax at your marginal rate. So it can be quite a big difference, Okay. I mean, the highest marginal rate is 45% or whatever it is versus capital gains tax is 18% on a like-for-like basis. So yeah, the tax differences are quite big.
Okay. So it's almost seen as kind of your income that's coming in. That makes a lot of sense. Cool. I mean, I think we've kind of covered a lot of the downsides of the things to think about. In terms of the benefits of trading, I mean, what would you say, somebody going into trading, what would you gain potentially?
I mean, if you get it right, you can make money very quickly.
Yeah.
I mean, that's kind of the only upside really. Like if you get it right, you can make a lot of money quite quickly.
Yeah.
The other like maybe cynical way is like, okay, you want to trade, you can effectively learn that it's not for you very quickly as well, right?
Yeah.
It's not as easy as those influencers have been making it out to be. Your 1,000 rand has disappeared and okay, you've paid their kind of school fees and you know never to go back, which is maybe not a great upside, but something that you can learn from it.
Okay, learn quickly, learn fast. Okay. Then going into investing, so much more long-term approach, what would you say the real benefits are of investing versus trading?
Yeah, so I mean, everyone should really be investing because that's the best way of growing your wealth. So yeah, it goes back again to the time horizon. Investing should be at least 3 years, but I mean, someone that's just starting their career now, let's say they're 20, they're going to retire when they're 65, they're going to be in the investment markets for 45, 50, 60 years, right? Yeah. So most people will be contributing into a retirement product, and that's where you've got exposure to investments for the longest time period. But yeah, it just goes down to building wealth, building financial security. So you need to get into that kind of habit.
Cool. And then, I mean, I know this is not all about investing, but just some top line things to think about when going into investing, like we did with trading. Yeah,
so I think choose high quality products. Okay. Fees are important. So, the products need to be high quality but low cost because, high fees can erode the value of your investment over time. Mm-hmm. And yeah, just make sure you keep contributing, keep certain pots for certain things. So like your retirement pot, like obviously if you've got a retirement annuity or some sort of pension fund, you can't really touch that. But I mean, it doesn't stop you from like putting your own money, discretionary investment into something that's also long term. And if you don't really need to touch it, don't touch it. If you want to go on holiday or you need to fund your children's education or house deposit, make sure you've got like designated pots for that, so that it'll also help you save towards like the target, I guess, so that you know where the money is going. But you need to have a long-term mindset, high quality products, low costs, and then avoid touching it where you can. Okay.
When you say high quality investment, any cheat sheet tips for that?
Yeah, I mean, often like a stock standard ETF that's representative of the market is a good place to start because just naturally it gives you exposure to the best companies. So for example, the local one is the Satrix 40, where the 40 biggest companies on the JSE are represented, and the bigger companies form a bigger part of that index. Similarly, in the United States, for example, the S&P 500 would be a great one. Again, you get exposure to Apple, Tesla, Microsoft, etc., etc.
Awesome. So we talk about kind of short-term and long-term investment. You mentioned both. But I think something that came through in the blog post that you wrote, which we'll also link to in the description below, is when you put money into investment, because you're not going to get that money back fast. You want to put it away for a long time, is that it should probably be money that you don't need to access at any given time. Even though with Franc, obviously you can, but it should be something that you put away and leave for a long time. Would you agree?
Yeah, 100%. And even like vehicles like tax-free savings accounts are ideal for that kind of like where you never like you don't have a designated like spending time for that or where you need it, and that you can put it for 10, 20, 30 years. Just gives your investment the best opportunity to grow. And that's the main thing about investing is just like psychology, like make sure you keep contributing, don't withdraw, and then just give it time.
Cool. So then we've obviously kind of looked over or spoken over trading and investing separately and kind of what the similarities and differences are. In terms of the kind of person that would be better suited for trading versus investing, how would you kind of describe that in terms of, I guess, what they also have on hand, right?
Yeah, I mean, I think trading is, because we've mentioned, it's quite risky, right? So I think a risk seeker effectively would be drawn to trading, or someone that needs to generate money very quickly. I mean, like I said, you could also lose that money just as fast.
Yeah.
But I also said like everyone should be an investor, right? So it's not necessarily that you need to be conservative to invest. I mean, there's you can still have an aggressive investment strategy. It's just that people that trade are generally, risk seeking.
Okay. Cool. So I guess just in quick summary, similarity, you invest and you trade to try and get a positive return. The big difference is obviously the time. Long term for investments, much more short term, like minutes, as you're saying, even milliseconds in terms of trading. In terms of the pros and the cons on trading, obviously you can make a lot of money. You can also lose a lot of money. You need a big time commitment from what you've said, kind of watching the computers all the time. You also need a certain amount of knowledge and a certain amount of capital. In terms of investing, it's long term. You need to know that that money is being put away for a good amount of time, and you don't want to access it because you want it to grow and kind of ride out the fluctuations over time. Anything that I'm missing in terms of?
I mean, we spoke about it already, but obviously fees and taxes take both on both types of activities. It's just that, like when you invest, you're paying the fee like once. You're not paying fees in and out. So like if you're buying something today and only looking to sell it in 10 years time, there's a big gap between that. Whereas if you're trading, you're buying and selling all the time. So you're incurring those fees over and over again, eroding your potential return. And like we said, taxes can be quite different. Income tax versus capital gains tax.
Great. I definitely feel much more enlightened around investing versus trading. Thanks, Seb.
Sure.
If you enjoyed this episode, please give us a like, pop us a comment below, and tap subscribe for future episodes. And thank you for joining us today.